massive jump there. German numbers continue to crater. That's probably going to be the sentiment we see throughout the rest of the year. However, the Eurozone, with a big turnaround there, you know, 60.7. It's got, is that a little dot on my screen? I'm not sure. It should be minus 58.3 expected there. It was 54.9 prior. But even so, a big jump there in expectations for the Eurozone as a whole. Now, just jump back to the UK. The UK Chancellor was out and he told the Treasury to aim for 2.5% GDP. If there's one thing I know is that forecasts, these guys are like a puff in the wind. You can't really trust them as far as you can throw them, but that's what they're going to be working towards. Kay, anything in data or thereabouts you want to throw your insight into?
No, not really, mate. It's been relatively quiet on the comments front, right? So data is really what matters. Seems like the zoo was already discounted, and people are just perhaps trading a bit of ECB expectations versus CPI. All the euro crosses are a bit higher again, barring the exceptions against Aussie and Kiwi, for instance. But no, I haven't really seen much coming out overnight. The only thing UK and EU may step back from confrontation over Northern Ireland was something that caught my eye, but that was already touted before Liz Truss got confirmed, right? That she may not trigger Article 16. Has it contributed to a bit of strength in the sterling? Possible. Possible. There's some relief that she is not going to go straight away into a clash with the EU. But for the rest, it's been very quiet on the comments front, at least. Yeah, I mean, opinions enough, but real comments that could be changing stuff, not really.
No, agree with that. It's been well, largely because the Fed's on blackout, which is always good, which means they're shut up until the FOMC, so we don't get bullard 30 times a day. But moving on to the US, well, actually, firstly, what I want to mention quickly is that one of the things we have within our platform, in our chat room, is that we do get, now and again, it's not as regular as it used to be in the old days, we do get some chatter of what's going on in the market. And we've been seeing some particular price moves early AM UK European session. And we have got the insight into what's actually driving those moves. That is something that we bring to our subscribers. It's quite a big deal when we hear this sort of information of particular flows. It's not often we get the names or where they're coming from, but this is something that's been happening the past 4 days in the mornings, possibly might last through the week. So if you do want to find out what's going in there, I'm not going to tell you on here, unfortunately, because this is part of what we bring to our subscribers. But if you want to get a bit of insight into what's going on in the market, and as I say, it can be a big deal for the price moves and what we see, and was one of the reasons why we saw euro dollar go to 102 yesterday. So if you want any of that sort of information, we try and get that as regular as possible. Then you can always do that by coming into our chat room and platform, and I'll just pop the link in there for you. So moving on to the US, as we're saying, CPI is a big theme today, the main piece of data. At the moment, rate expectations for a 75 pip hike by the Fed stand at 87% probability. So that's where the market's leaning heavily towards 75 pips. But there's been a Reuters poll out as well, and they poll their economists, and 44 out of 72 are going for a 75 BP hike. So that's more nearer 50% than 87%. So there's still a little bit of wiggle room there between expectations on what the Fed may do. Now, a lot of people have also been pointing out there was a New York Fed survey out, inflation survey out yesterday, which showed 1 year inflation expectations drop into a 10-month low. 3 years were the lowest in nearly 2 years. And a lot of people are obviously, with the CPI report coming out today, are looking at that and, you know, making their own judgments that CPI may head to the soft side potentially. One thing I will point out is that there was also a Wall Street Journal piece showing that gasoline prices were down for 13 weeks on the trot. So the 13th week of drops for gasoline prices. Now, gasoline prices are a big deal in the US, and a lot of that can drive inflation sentiment. So although people are pointing to this drop in CPI expectations as being a big deal, you look at something like gasoline, where that price affects a lot of what people do, and you can see how the sentiment shifts. So although these regional Fed surveys can get a lot of headlines, if you look under the numbers and you see things like gasoline prices dropping, you know, pretty much for 2-3 months, you get an idea why those inflation expectations are dropping. So for me, it doesn't mean that inflation is on its way down significantly over the next 6 months or whatever, but there are reasons why it may start to see some softness. So anyway, let's look at the CPI numbers. Firstly, what's expected today? So the headline number, 8.1% expected, down from 8.5. The core number, 6.1, expected from 5.9% prior. Now I want to go into a little bit about the difference between the headline and the core. The headline is a bit more volatile. The core number tends to lag behind the headline. So we can see the headline rushing up, and sometimes the core takes a while to catch up because it's where prices feed through really deeply into the economy. You know, you get a big jump in oil prices, you'll see headline inflation jump. But until those prices feed down the chain and come into transport, firms putting their prices up, manufacturers putting their prices up, all that sort of thing, that's where the core picks up, when that feed throughs come all the way through. But what I want to point out is that we've seen something that's a bit different potentially. We've seen the core top out before the headline number. So this topped out at 6.5% in April. And that's a bit unusual. Or it could be a bit unusual because, as I say, the core tends to follow the headline number. Now, what the main point from here is that it's been downhill since April. So even while inflation has been moving up there, the headline, we've seen the core dropping. Now, what we could be seeing is this core reaction, this topping, coming just on that little blue point there where we saw headline inflation dipping, and then we saw headline taking off again. So we could be in a situation where the core is going to start taking off again, lagging this move that we saw in the headline up to that 9% mark. So for today, a lot of eyes are going to be on that core number rather than the headline. Although in a perfect world, if they both move in the same direction at the same time, you know, that's going to be something that the market's going to jump on. So really, it's, to trade this, you've got to look at two things. A, what the data is expected to do, what the data does, and how that matches off against the Fed expectations. Now, we know the Fed have already said they're going to look through soft prints in inflation. So unless we start to get inflation down well under 5% and looking like it's heading lower, the Fed aren't going to budge. Whether this comes in CPI at 7%, the core comes in at 5.5%, the market's going to move, probably the Fed aren't. And so that's going to be important for trading today. So, you know, the question you've got to ask yourself, when the data drops, does it change the Fed's mood? And if it doesn't, then you've got to go with a reaction. Now, if it's soft numbers, as people are looking for, you're going to see a dip in yields, you're going to see a drop in the dollar. Is that going to change the Fed's mind? If it's not, then we've seen time and time again that the market wants to trade the Fed pivot, trade the turn by the Fed, and they keep getting it wrong and they keep getting their asses spanked. So that's what I'm going to be looking at today, in how these numbers potentially give me a trading opportunity. I would love soft numbers, not massively soft, but I would like softer numbers, because that's the sort of dip you want to get into. But conversely, if we're looking at other pairs like euro dollar, cable, and the like, if we do get strong numbers, are we going to test those key downside levels? And then we ask the question again, we're trading more technically than data driven. So that's my thoughts for the CPI later on. If you've got any questions, throw them up in the room. I'm going to bat it over to Kay to get his thoughts, because I've been waffling for a bit now. Kay, your thoughts on CPI?
Yeah, I kind of agree with you. The Fed is not going to change unless we're starting to really get a string of weaker CPI data. But we can't overlook the fact that it seems that the sentiment towards the dollar, I don't know whether it's hopium or whether it's a real sentiment change, because we have seen lately that despite the yields holding up, the dollar hasn't really gone any further. So okay, we've ran into very big levels, which I will show in a minute. But it does seem like a bit of sentiment change. Of course, other central banks can catch up on the Fed. So there's always the other side of the dollar pairs that we have to take into account. Aussie has seen a rebound, euro, you name it, cable. But there does seem a little bit of a change in sentiment in the market. At least those being long dollars, happy to take profits. We have seen an article, I don't know if I mentioned that yesterday. I think it was over the weekend or on Friday or so. Somebody from a big hedge fund or asset manager said that they think 145 is enough for now in the dollar yen, for instance, and that they expect sooner rather than later a bit of a change in tone from the Bank of Japan. And that's just an example. We've seen a few changes in sentiment. So can it run further? It's possible. So on the CPI today, I think the market is going in thinking that a bit stronger, but not overly strong, of course. Not if we start to print 8.79 or whatever versus the expectations of 8.1, is it? And then looking at the core, of course, if we start to print like really high numbers and the expectations are for a lower one, so that would be a bit of the surprise trade. The dollar can pick up, but I think in the sentiment, I think quite a few people are waiting for retracement in dollars to perhaps sell a few more, and that is just a feeling that I have going into the day. So we can also see it on the equity markets, on the metals who have been running up. Gold not as much as silver, but all of the equity markets have been doing well. And is it hopium? Is it really a change in the dollar or a reversal? Perhaps much too early to call. Personally, I think it's much too early to call. But yeah, there's this change in sentiment towards things. So those dollar sellers or profit takers on long dollars, they may be tempted to do a bit more if the number comes in indeed weak or weaker than expected, and they might be looking to sit on the offer in dollars if the number comes in at or a little above expectations. So that is just my feeling on what the market may be doing right now.
Yeah. And it's important to know that sentiment. It's important to know the longer term sentiment and the shorter term sentiment. As we know, we've said, as Kay mentioned, we have seen the dollar in a more rally sell mode at the moment. So that's got to be factored in. Strong numbers doesn't mean we're going to bust 145 in dollar yen. But if we get a move up towards there, if we do get, if it's really strong and we get a move to 145, then you've got to ask the question, can we break that level? If we can't break that level, then perhaps the short-term sentiment that Kay's speaking about, the rally sell in the dollar, that steps in. It says the market says, right, well, you're not breaking that level again. We're going to sell it back down. And that's how you look for your opportunities. It doesn't mean strong numbers, dollars going to the moon again. You have to then match that off against your techs. Where are your levels? And that's the exercise I say ahead of all big data. Go over your charts. Go pick your levels. Score your levels, if you like, the ones you think are going to be the most strongest, or the stretch points. 141.5 in dollar yen, 143.50 on the upside. Euro dollar, we've spoken about it. Don't even have to put it on the chart. 103.40.60 on the top, 99 down below. You have these levels, and if there is a big data variation, then you say, right, can you break these levels, whichever way the data comes out? And if it can't, then that gives you your potential opportunity, because that's where the market's drawing its lines. Because it's very hard to grab a data point. Kay does it quite often. I used to be able to do it when I was on the floor, matched off against other humans. When you get those numbers popping up on the screen, you can react really quickly. Nowadays, it's very hard with all the machines and the algos jumping in, straight away. It's very hard to catch a data move as it happens. So you have to look and trade differently. You have to look around and say, right, okay, if I can't trade the initial reaction, I need to know, what does it mean for the longer term trend? What does it mean for the Fed? What does it mean for the short term trend? And use your techs to make your trades. And like I say, you pick your levels and you say, right, okay, if I can't run with a move, where can the move stop? Or where's it likely to stop? Because if it stops there, the price can only go one other way. It's the opposite way. Depending on how far it goes, it may be 10, 15 pips. If that's all it gives you, that's all it gives you. But that's how you can set up for trading this. Kay, do you want to have a little quick round robin? Are your charts all sorted?
I'm roughly there again. Tried to put all my spaghetti lights back on. Yesterday I was having to perform some tasks on the PC and some of my accounts, so I was a little bit missing in action for what the charts are concerned. But yes, let me share my screen.
Yeah.
While you're, I'm going to
while you're setting that up. Just want to answer Jizerman quickly. Algos make it hard, but doesn't stop orders still work for catching data moves? Yeah, you can use stop orders, but there's a risk of getting flipped out, because if you put a stop orders in above and below the market into the data, if you get a hairy bit of data, you can get flipped out both ways. So in that sense, I'd use perhaps stop orders well outside the market. So if it's a big move, you might catch it. But you obviously run the risk of how far you want to put those stops apart and how far the move continues after. But it is one way of skinning the cat. Anyway, sorry, Kate, back to you, mate.
No problem at all. Just grab it when you feel the need to answer. Okay, euro dollar then, as Ryan was saying, 99. I don't know how many times we hammered on that level. 99 is the level where the battle for parity is won or lost. We tried it. We tried twice below, and twice it failed. So I think we now know exactly what the importance of that 99 level in the euro dollar, because it has been tried and tested. So that's really the most important level that we are watching to the downside. And the 103.5, 103.70, like the other day, that's really our boundaries. And for the time being, and I will say it again, I don't think that we can talk about a dollar reversal yet, but we can talk about a little bit of a dollar sentiment change, and that's what we have seen from those lows last week. We have seen a pretty decent reaction to the top side, but we're in this. If we take a shorter term, not even a shorter term, it's from the 115, the last how shall I say, zigzag move, and from the 115 down to down to those lows in between here, tops there. The famous 103 50 60. It's coming in around it's coming in a bit lower today. Yesterday it came in around 101 80 85. The euro dollar went just 5 pips above and then cooled down. So I think for the close today, if you want to look at it from a shorter term, this now starts to be a little bit close for comfort, right? Taking into account it is a CPI number. It is a number that most of the market are still very much focused on, because that is what central banks have told themselves, have told us themselves. That is what they are really looking at and what is driving them in the short term. Although my personal view may be a little bit different, they may have to start to look at, well, I've always looked at it, on how growth is behaving versus the inflation. So it's a bit too close for comfort, right? This 101.70. So I would take those levels of yesterday again around 101.80, 101.90, 95. On the short term, close above, below today, maybe enough. Close above, it may be enough to go for a retest of that big level. Close below, and we may start to drift down again to around mid ones, mid 100s. That is, I think, for the euro what we are looking at. Moving over to the cable is an interesting one, because we have seen quite a bit of demand there from this low. Let's not forget this was the 2020 low, right? We came, retested it like literally perhaps a couple of pips below, maybe 114.04 or 5 was the low. It was an important level also on trend lines, and we're seeing a pretty big jump. I've always liked this 117.60 zone in the cable. It's been a traffic zone, and it's been a bounce and break level. If we look at it here, for instance, it was a low here, tried below, never closed, tried below, didn't close, just came on it and bounced. First close that we had below went lower, came back on it, failed again, and then we went down to the low. So I will like I will monitor the close today above or below 117.60 in the cable. I pretty much like this level for a gauge of strength or weakness on the cable. Dollar yen, as Ryan already said, 141.5, 141.5, 143.5. The spike we've seen here is this trend line here from a bit of tops here, went through the top here. So we watch this 143.5 in between 143.15, 141.80 on the downside, and then to me this coincides now roughly with the low that we have seen before, this support, and it's also the last line of support from this 140-145 move. If it starts to trade below 141.35.50, I think there may be more people pushed towards the exit or trying to accompany a move down in dollar yen, which could see us trade back below 139, and why not even into this 138 zone. But that I think is, I don't know whether just this CPI number today will have the strength to drive it one way or the other. I'm still not really looking a lot at the dollar Canada because of the proximity of the US. I really don't have any feel. I trade it on oil if you want, or trade the tech levels. It was a big rejection around 132, but here I really don't know what to do with it. I think we were a little bit in the middle of nowhere. Aussie was interesting. Same thing here as on the other currencies. Look at this trend line, bomb. It came in around around 66.90. We just tested a 67 fraction below, and we saw the similar bounce as we have seen on all dollar pairs, testifying of longer, probably longer term dollar longs. Really happy to take profits. We didn't even in Yossi, we didn't even go and test the prior low, but it's a really those are nice bounces, those things. So we now holding this this trend line around 68 70 65 70, call it, at a piece around 68.55 for the shorter term. If we start to get back below this 68 and a quarter is a very, I like this level. It seems psychologically relatively important, this 25.35. So if we ever start to trade back below, be careful for renewed dollar buying. If in turn we are holding this 68.70 and we start to break above 69.10.15, why not dream of a move back up closer to the 70 level? Kiwi is a little less sexy in my opinion. It's got such a beating after the RBNZ saying that they might be roughly done at the end of the year. We never managed to really get back to a more positive. Of course, we've also done 2% higher together with the rest of the dollars. But as long as we are below 61.80 and even 62.30, 60, I'm very little inspired to at least try to sell dollars versus Kiwi. I'm a little worried that if ever the dollar is making a comeback, this Kiwi may be one of those who suffer. But okay, it's one of the pairs that I'm less interested right now. Quick look at this dollar China. Very interesting that PBOC fixed below 690 again, as Ryan was already saying, but they did not go on the defensive as much as they have done when dollar CNH was trading up at 699. I think then they were like 450 points or so below the calculated expectations, where now they are like 100 and 150 below. But anyway, they are below 690. It didn't prevent dollar China from crawling back up again from this support line. So this 691 down to 689.80 is as I was showing already, the first support area. If ever the CPI comes in a little weakish, I still think China isn't done. And actually, the PBOC, if I saw this well today, drained 2 billion is it CNY of liquidity, which is a bit surprising that in that case dollar CNH still rallies. So to me, that shows that for the time being, the deep buyers are feeling relatively confident and comfortable just ahead of 690. And what else? Yeah, the dollar MEX came back in this. I was telling about these 670s support area, right? So we came back testing this trend line. There's a horizontal support in the lower 1970s. It's holding for the time being, but we are not far away. It's 1982. If CPI comes in weak, where the Banxico has not changed their tactics yet, it could be that this one sees another drop down into the 1950s. But we know that Banxico likes to copy the Fed or front run or copy, but yet keep very close to the Fed. So it may just hold on a weaker print. Watch the low 1970s on that one. Just a couple of crosses. No, first of all, the metals. So we saw this gold, we saw this break yesterday above the 23-28 zone, tried it up to 36, and we're back inside. So for this afternoon, watch yields, I would say, for gold. If the 2 year starts to move back below 345, 350, moving back into the 340s, this may spike and come and start to test the 1750s again. But for as long as we're below there, I'd be a bit careful. It may just run out of steam. I think silver is much more interesting, much more interesting. And I was always saying, for as long as the global growth and economic data slows but doesn't show signs of really collapsing, this may be a better one than gold. And as a matter of fact, it's really starting to look more promising. So people know, well, Stelios, Brand. Stelios is long. Took a few off yesterday. I did the same. I'm still wearing some add-ons to my long term, but also we have to respect levels, and I think the 20 is a bit of a level. If ever we see a slowing down CPI, this may be a case for moving back up to, why not, high 20s. Keep an eye on that one. I will be interested if ever we come back down to this support line here in the low 19s. I'll get interested again. And then, as I said, just a couple of crosses. This one here, Euro Aussie. So we have seen some strength in the euro the past couple of days, but this one, having had from the end of August until beginning of September, having had this move higher, is now starting to show signs that it may exhaust. We had this trend line broken yesterday, went back up then to retest it and failed again. So I'm starting to look at this one. If ever the euro would run out of steam, I'm not excluding this one to come and have a look back down here. Of course, we need to watch out the 147.75 and then highs that we've seen yesterday. There's a double layer here. If it goes above if we get close above 148.50, 60, it can shoot higher. But in the meantime, I don't know. This is showing signs of perhaps possibly exhausting a little bit. And then finally, the euro mix again. Yesterday, spike up into the 2020s. I've added a little bit, and then I've re-entered. I've actually closed mine. As the people in the room know, I've closed mine here. Was it? Yeah. Yeah, it was around. No, it was here. That day, last week, I've closed my positions, and everything has been updated in our chat rooms. And here I'm respecting this first trend line, big zone here of resistance around 2040, as I was already mentioning. If ever this crossroad around 2050 starts to give way, there's another one waiting here around 2060, but be a bit careful if this starts to give way. For the rest, don't change a winning team. I would say this one, that there's still a huge amount of differential in interest rates in there. And also the mix is also a currency that is supported when the market doesn't fall apart, and with risk still doing pretty okay. If we look at the S&P, for instance, this thing is still doing very okay. It's something that emerging market currencies will like as well. If this in turn starts to turn around again violently, then I would be a bit worried about my euro mix. But in the meantime, let the market do its thing. Yeah, for me here, we're back on the S&P. We're back in a triangle. It could go up to 42, 50, 70, you know, if the market continues to look at it positively. We're on a bit of an intermediate resistance here for me, but I don't have anything in it. It's an interesting watch, and interesting to see this this rebound. It has been said that a lot of people went out of their S&P, and also there were a lot less options in the market, and it seems that some were really underhedged in what their normal book portfolio is telling them to have in the position, because you know, model funds, asset managers, they don't really care too much about price action, but their portfolio versus what versus sentiments and stuff tells them how much they need to have of each. And it seems that they were very underhedged here. We saw some comments about that last week. And then as per miracle, this thing set in a 250 points rally. And with that, Ryan, I give it back to you.
Thank you very much, mate. A quick question from Mavi in the Q&A saying, would this recording be available after the show? Wish to listen to some points made here over again. Yes, it will be out later today once the guys have finished doing the post-production, making me and Kay look good on that, even though you don't see us. So yes, we put up all our replays on the Forex Analytics YouTube channel, so check it out there. You done with the screen, mate? And I'll grab it. There we go.
Just grab it.
Just something to be aware of for pound traders, particularly cable. After we get the CPI from the US today, tomorrow we get UK CPI, which could be very volatile. You know, as I mentioned, we're up in the 10% for CPI here. It could start getting a little bit hairy with all these increased prices, particularly from energy. Now the price caps are going up in October, and this is obviously August data, so there is naturally going to be some lag before when we potentially see those coming in, but prices are still on the up over here in the UK. That's going to be important because you could get a bit of a double whammy in terms of getting a soft US core, which will see cable shoot higher, and then a strong UK core, and then it shoots even higher. So, you know, keep an eye on that one for tomorrow. What I'd also look at, or what I'll probably be looking at more so, is euro sterling. Now, expectations for the Bank of England, they're running a bit hot as well. 80.6% probability of a 75 pip hike. Now the BOE have been gaining 50s, so that would be a bit of a step up there. That would also mean that they increase potentially the rate they're hiking at over the ECB, and then we get the monetary policy divergence play coming into it. Now for euro sterling, I've been short since last week off these highs up here. Sorry, I was in last week. I was into the highs up here as we got into 86. Still running a bit of short there. I did offload some at 50s yesterday, so I'm still running a bit more short and looking to see it lower, but we are into one of these zones that I have marked where the price tends to mess around, becomes a bit of a support and resistance zone. I really need to see that break to see further downside. If we do get a strong CPI number tomorrow from the UK, that could see that price moving down again through that zone and lower. So just something to be aware of as we go into tomorrow. I've not really got much more to offer unless you guys and girls have anything you want to throw up there in the comments, anything you want to look at. I have noticed your comments are getting a little bit quiet in terms of what questions for us. So please get your thinking caps on. We want to hear from you. I want to hear what you have to think about certain pairs, assets, or whatever, central banks. You know, let us know your thoughts. But we shall deal with the aftermath of the US CPI tomorrow. Until then, as always, thank you very much for coming to the Flow Show. Thank you, Kay, and have a great day. Trade safe over the CPI, and we shall see you tomorrow.
Safe trading.